Hey guys, this is Mark Shawson, the Pattern Trader. In my weekly video report yesterday, I started out by showing the elephant in the room, the boogeyman in the room, particularly for gold traders and also stock traders alike, in the form of the rising yield curve in the 10-year Treasury bonds. The U.S. Treasuries are risk-free assets, and at the height of the pandemic last year, the yield of the 10-year dropped to 0.5%. And now, steadily in the expectation of inflation as a result of all of this fiscal and monetary stimulus, we see that rates have been steadily rising, steadily creeping up. And right now, the 10-year yield is a hair over 1.3%. So all of a sudden, those rates of return, which were yielding investors little to nothing about a year ago, are starting to compete for other asset classes. So now you can get a risk-free rate of return on treasuries between 1.5% and 2%, and all of a sudden it's not a no-brainer to start speculating on gold, which gives you no return. And all of a sudden the high multiples, the high valuations in stocks are going to be put in perspective by the fact that investors have other alternatives to park their money in a safe haven. So we've seen gold starting to crater. Gold is trading within the bands of this ascending, broadening price pattern. I talked quite a bit about the ascending, broadening price pattern and showed the implications of this chart pattern on the pound versus Australian dollar last year, where once pound Australian dollar bust this pattern at 196, it crashed all the way to 178. Now, it's my thesis that gold is a little bit more than halfway in this ascending, broadening price pattern. The full measure would take gold to about $1,650 to $1,700. And that's my expectation, that we will see a further decline in gold prices because of the implications of this ascending, broadening price pattern. Now, the NASDAQ, ironically, is also trading at the upper levels of this ascending, broadening price pattern. I'm surmising that we are reaching a meaningful trading top right here, right now. I personally bought the puts on the QQQs. QQQs are an ETF that is a proxy for the NASDAQ, and buying puts, I bet that we were going to see a downward trajectory in the NASDAQ, and that's exactly what we're seeing. Taping this pre-market, but in the pre-market session, the QQQs are down 400 points already, which is quite a big move on the NASDAQ, and that's before we even open today. So I think that we could see a pretty good, healthy decline in the NASDAQ because of the implications of this ascending, broadening price pattern. I talked quite a bit about the yen trades. The yen trades are at an inflection, particularly the euro versus the yen. I also advised our members to dump out of the pound New Zealand. I got long a couple of weeks ago around 191. It was trading close to 192, and advised our members to take profits while I take another look at that. So those were just some of the things that I talked about in the weekly video report. I showed our members how to capitalize on monster moves in a stock called Lyft last week, where I bought it at 46 and I'm still in the stock at almost 59, and also short the stock of BYND, which is Beyond Meat. So if you would like to understand how I use price patterns and price action to capitalize on monster moves in the market, then I highly suggest you download and check out my weekly video report. This is a no-brainer offer because you get to elect, it's a pay what you want. So you get to elect the price, you get to elect what value you'd like to derive from this, and it's a pay what you want. So I look forward to seeing you on the next weekly video report. And with that said, I will wish you a healthy and prosperous trading week, and I will see you next time.